Bullish. I think that the exciting developments in the asset class are bank acceptance and credit development in the banking network. So we've seen about half of the large banks in the United States start to extend credit against IBIT in the past 6 months. And a number of banks like Charles Schwab and Citi have announced they're going to start to custody Bitcoin and extend credit against it in the first half of 2026. So I think that the real story in 26 is banker acceptance of Bitcoin, willingness to custody it, trade it, and extend credit against it. And that should catapult the asset class to new levels.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Michael Saylor says Bitcoin's 4-year cycle is dead, exploring why it matters and what's next. Stick around to uncover his insights.
Yeah, I think that the 4-year cycles are based on the Bitcoin halving, and the Bitcoin halving was really important for the first 12 years of the asset because we were cutting the amount of Bitcoin that was being cut from the supply was very material, relevant relative to the demand in the market. But right now, you're seeing days when Bitcoin trades $50 billion or $100 billion in a single day. The total amount of the halving in the next halving is going to be 225 Bitcoin. So 225 Bitcoin times even 100,000 a coin is $20 million a day is the impact of the halving. And so $20 million isn't the first order impact on a $50 billion a day liquidity. It's not even a second order impact. It's probably a third order issue. The primary drivers of Bitcoin right now are the structural developments in the market. For example, if the banks extend $50 billion worth of credit, right, that dwarfs 20 million a day in the halving. And then when the SEC loosened the restrictions on derivatives trading on IBIT, the open interest in IBIT went from 10 billion to 50 billion in a few weeks. So you're talking about tens of billions of dollars of demand for the asset based upon the embrace of the traditional finance establishment. And so the asset class is being driven by the structure of support in the banking industry and in finance and a few regulatory changes that are actually enhancing that support for the asset.
Bitcoin's sharp decline in late 2025 has many traders wondering just how low the price could fall next year. After dropping over 40% from its October peak above $126,000 and touching the $80,000 zone, confidence has wavered, yet the market remains far from quiet. The slide has been intensified by heavy ETF outflows and shifting macroeconomic conditions, but institutional interest is still present beneath the volatility. Analysts note that passive selling pressure has weakened, suggesting sellers may be losing momentum even as the broader trend leans downward. Institutional flows remain one of the biggest forces shaping the market, with major ETFs experiencing billions in redemptions throughout November. At the same time, firms like ARK Invest increased exposure, hinting that long-term conviction has not disappeared. Concerns around Strategy's potential index removal and Michael Saylor's response have also added fuel to market uncertainty, especially after JP Morgan warned of heavy outflows if the delisting occurs. For now, Bitcoin's most important support remains near $80,000. A break below could push prices towards $70,000, and in a deeper correction, possibly the mid-$60,000 range. While nothing guarantees a quick rebound, some signs indicate that buyers are slowly regaining confidence as December unfolds.
Before November of last year, before the red sweep, there was a lot of uncertainty over the asset class. And so I think a lot of publicly traded companies were afraid to go into space. We have a very supportive administration. The president has designated Bitcoin as digital gold. The Secretary of the Treasury has said we want to be the crypto capital of the world. Donald Trump said we want to be a Bitcoin superpower. So we're the first year of institutional adoption. And in 2025, you got the support of the SEC, the support of the CFTC, the support of the Secretary of the Treasury, the support of the President of the United States. And so normally public companies are very risk adverse. And with all of those supportive moves by the administration combined with the accounting profession rolling out fair value accounting, which was a very big deal. Fair value accounting means that when you generate gains, you're allowed to mark them up on your balance sheet. And before that point, you could only take losses. You could never take gains. So the accounting was reformed, and the regulators began supporting the asset in the year 2025. And I think that once those two things happened, it became pretty clear that it gave a structural competitive advantage to a public company to have Bitcoin on their balance sheet, because Bitcoin has been growing 50% a year for the past 5 years. And so all things considered, if you're buying Bitcoin, you're buying the world's dominant digital monetary network growing 50% a year. And the alternative would be to hold something growing 5% a year.
So what's your outlook for DATS in 2026? Do you think this momentum will continue, or do you think that this trend will kind of fizzle out a little bit?
I think that generally public companies will start to buy more digital assets and hold more digital assets on their balance sheet. And I think that Bitcoin adoption is going to spread, and that will be good for Bitcoin, and that will be good for those companies. I think the real story going forward is going to be digital credit. If you think about the perfect product is a bank account that pays you 10% when the money market's offering you 4%. And so if you can offer people 600, 800 basis points of additional yield over the risk-free rate, whether it's in the euro, the yen, or the dollar, then everybody's reaction is, yeah, I want that. What's the catch? And so I think that the real interesting idea is that digital capital, which is what Bitcoin is powering digital credit, and digital credit is 2 to 4 times more compelling than traditional credit instruments for people that want fixed income.
BlackRock's iShares Bitcoin Trust, IBIT, recorded roughly $114 million in net outflows on November 28th, highlighting how sharply investor sentiment has shifted during the latest wave of market volatility. As Bitcoin continues to experience unstable price action, many institutional players are scaling back their exposure, preferring to wait on the sidelines rather than take on additional risk. This pullback reflects a broader trend across U.S. spot Bitcoin ETFs, where several major funds have reported consistent outflows throughout recent weeks. The movement suggests investors are becoming more cautious, reassessing their digital asset positions as uncertainty spreads across the crypto market. Even long-term institutional holders appear to be stepping back, signaling a temporary decline in appetite for Bitcoin during this turbulent period. However, the day was not entirely negative for the ETF landscape. While BlackRock saw heavy withdrawals, other issuers like Fidelity, ARK Invest, and Grayscale managed to attract fresh inflows. These inflows help U.S.-listed spot Bitcoin ETFs close Friday in positive territory, bringing in a combined total of about $71 million. The mixed activity shows that while confidence may be shaken, there are still investors viewing the volatility as an opportunity rather than a warning. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time.